Hey guys, what's good? Today I'm gonna talk about blowing up your account. I'm gonna talk about different trade setups, and then to make sure that we offer some value to folks that have a bit more experience, we're also going to be looking at a couple of stock picks that look interesting right now. If you're just looking for those, it's gonna be HD, Fiserv, and Costco, but we're gonna get into them a bit later here. Feel free to skip forward to the timestamps. Now, with regards to blowing up your account, guys, now let's define that first off. Obviously, it kind of means either completely losing all of the money you have in a trading account, or it might mean losing a big enough portion of the money you have in the trading account so that you can't trade anymore or can't do it efficiently anymore. In my opinion, everything starts with having a stop loss, guys, and this is the most important rule, honestly. If you want to be able to have a long-lasting career or even build one, if you're at the more beginning stages of trading, you need to make sure that every single trade you take on has a stop loss. Don't confuse your long-term investments with your trades, and don't take your day trades turning them into a swing trade if they don't work out on the daily, and take your swing trades and turn them into a long-term trade if they don't work out in a 2 to 4 5 day or 1 to 2 3 week time frame. I don't know, guys. It's really important to understand exactly what you want to do before you start doing it. And with that, I'm gonna get into an example here on Intel. A few days ago, it was actually Wednesday of last week, where we sent out this, I'm not gonna call it a signal, but we just made our Patreons aware of this trade setup on Intel. We had support on this ascending trend line, the blue one, and then we had support on the descending yellow trend line as well. So it was a pretty interesting confluence area over here. We've drawn in Fibonacci at that area as well, and we were right around the 0.5 fib, so everything made sense at that moment. Everything made sense. Now, what happened immediately after was that we obviously took a trade. Nvidia reported earnings after market that same day, and for some reason every single stock, including Nvidia, AMD, Micron, which we made a killing on, rallied from there and had a couple of really good days, as you all probably know. But Intel was the only one that took a pretty severe beating on Nvidia's earnings report. So with that, guys, it's really important, again, to make sure that you always have a stop loss. In this case, we only lost 50 cents per share here, so the trade was predefined. We knew exactly what we were risking. We knew exactly what we're gonna be doing here. And I'm gonna do the math again for you guys. Take 100 trades, make sure you always have a 1 to 2 risk to reward ratio. Lose 50 of them, win 50 of them, and you're still gonna be able, on a $100 risk per trade, to make at least $5,000 at the end of that 100 trade batch. So this is the way you should be thinking about things. It's all about probabilities. If you don't have probabilities in your corner, I don't care if you're gonna be able to take 80% or 90% of your trades into profit, you're eventually going to blow yourself up by taking too big of a loss and not having gains that kind of hedge those losses. In some cases, we've had gains that have hedged 5 or 6 or 7 different trades that were losers, because we are letting those trades give ourselves enough upside. Now, obviously, in this case with Intel, we entered again once the trend line was broken again to the upside, so no harm, no foul. Now, another really important situation here is that we've got a few scenarios, and I'm actually going to be switching on to the hourly here to depict all of them for you guys, because for anybody that hasn't had the ability to actually trade pre-market and post-market, obviously that felt like a gap down, and you probably weren't able to exit your position until the Intel stock price was 28.28 over here, so below the stop that we had. This is why it's so important to make sure that you pick a trader that allows you pre-market and post-market trading as well, not just during regular market hours. Obviously there are a dime a dozen out there, so just do your own due diligence and make sure you pick a good one. Now, subsequently, somebody that might have experienced that gap down might have lost 75 cents a share, so it's still not the end of the world. But then for any of you guys that haven't had a stop loss associated with that trade, you might have gotten out at $2 per trade of a loss, and that's already way too big of a loss. So please make sure that you always have a stop loss associated with every single trade. It's really important. Now with regards to the stock picks, guys, let's move into those. So first off, we have HD. So we've got Home Depot. The trade is pretty straightforward. We're gonna take a long position here. It ran a bit further than I would have ideally liked to pick it, so maybe we wait for it to retrace a little bit. But even if we take a long position from here, the stop should be underneath the most recent lows here. So it's not the easiest loss, it's $9 a share, but the upside is pretty significant as well. So we still can get a 2.6 reward for a 1 risk. Maybe you can even let a couple of the shares run to be kind of a 1 to 5 risk reward, which would be very sweet. But again, maybe we want to wait for this one to retrace a bit, or just enter with a very small position and enter with a larger position once it does retrace a little bit. That's up to you to decide according to your own risk profile. Now the second option here would be Fiserv. In the case of Fiserv, it's pretty straightforward. I'm not gonna comment too much because you guys see what I have drawn in here. I don't love the MACD. That's one of the parts. So if we need to give this guy another couple of days to cup over and just make sure that we get kind of a bottoming formation here, that wouldn't be the worst thing. And then we can also enter with a better risk reward. If we take it from kind of $111, we're gonna be able to potentially run it again, stop loss very close to our price. And then the take profit could be pretty juicy, so we might lose $1.50 to make roughly $9.50, so a 1 to 6 risk reward ratio. And the final one, guys, is Costco. Costco is a really juicy, really interesting one. So Costco has been trading in this triangle for quite a while, a triangle that's also confirmed by volume. And when this happens, and when we have a breakout on volume, as you guys can see has happened here, just check out the volume that we have lately. It means that Costco has the chance to rally a ginormous amount from here, because you guys might laugh at this, but the way that you actually measure a triangle is by doing this and then by extending it from the breakout zone to the upside, and then to see exactly, this is cool because hypothetically the way this measures out is that you can duplicate the base of the triangle in this case and extend it across from this top over here, and then wherever the two lines converge, so we've got this top and this ascending one, so within this area over here that I've circled out around $652 to $660, we should be able to reach there by the end of the year, as you guys can see, roughly between September and December. So this is an interesting one to look at, but obviously we're looking for swing trades, so I might take kind of a leaps type options play on it, but that's for another day and another discussion. The setup here in terms of playing shares is very straightforward. We want to make sure we have our stop beneath the apex of the triangle, just in case this thing goes and retests the triangle further. And I think the take profit can either be this 540 range here for roughly a 1 to 2, or we can target the top of the triangle here at roughly 560 for a 1 to 3. Obviously a more expensive stock, so not something that's as easily accessible to everybody. That concludes today's session, guys. Please check us out on Patreon. We post a ton of free content, so it would be a shame not to check us out. We obviously have a couple of tiers that would give you guys insight into even more trades, but even the base free tier is really interesting. If you want to check it out, let me know down below if you have any questions. I'll catch you next time. Take care.